You mentioned also the review of the code. Obviously, we're coming up past the 3-year mark, and a lot of progress has been made. Perhaps we go to David first on what you would like to see in the review, and then maybe Guy could give us a hint in terms of how he thinks this review might evolve in terms of how extensive, or is it sort of a more iterative approach, taking on board the feedback and the experience of the last 3 years? But over to you first, David, on your wish list.
I won't give you my wish list because Guy's heard it 5 years ago. But look, I think one point Guy said, and you've just said it yourself, right? This is an iterative process. And again, I go back to the point of engagement. So the way I look at it, what I do at LMAX Group is build a lot of technology. Effectively, we're a fintech company. And quite often, if I ask my tech guys, how long does it take to build this? They'll tell me it's a year. Well, I need to get product out the door before that. So we have this thing called MVP, minimum viable product, right? Not most valuable player. And actually, that's the way, I think guys just said it about the code. If you're struggling to sign up to it, see this as the minimum viable product. Honestly, there's not a lot to disagree with. I mean, I can disagree, and I will do. I disagree with pre-hedging, and I disagree with last look. It doesn't exist on LMAX Exchange. It cannot exist, right? We don't operate with last look. But that's okay, because practitioners use it, right? People who trade on LMAX use it, right? But if I look at the 55 principles again, it's the minimum viable product. It's what you should expect as a customer. So I don't know what's holding you up, right? In terms of the 3-year review, I will have a little pop here at Guy and the GFX. It needs to be more inclusive. At no stage have I been asked to be part of any working group. That's just a fact. Why is that? I'm the most vocal opponent of Principle 11 and Principle 17. Incidentally, I'm not saying I have the time or want to be part of a working group, but it's okay. The working groups themselves have to allow an opposing view, okay? FX for too long has been a closed shop, right? That's partly how we got there, right? How we got to the scandals, why we have a global code, right? Why we have a much more transparent market. It's not all down to the code, right? The FX market today is a much better market than it was 10 years ago. It's not all down to the code. It's down to the practitioners in it, the behavior of the people within it. It's down to some regulation. It's down to the improvements that technology have brought, right? But we must have inclusivity. Does the buy side, you talk about, I hear 2 different numbers there. Guy says 50% of the big guns signed up. You tell me 10% overall. Okay, has the long tail, do they feel they've been included? Is it apparent they've been included? Have vocal opponents of a particular principle been made aware that they're included, or that their voice has been heard? Guy's predecessor, I spoke to him in an airport lounge, right, at Heathrow, and he told me last look wasn't even a topic for debate, David, right? And you shouldn't push your commercial models, right? It's not a commercial model, it's an execution model, okay? That's all it is. But it's okay to have a differing view. So what I'd like the next 3-year review is more inclusivity, right? I happen to believe you're going down the wrong route with standardization around last look, because I think you're going to end up with a very long list, right? But if it's included, if it's acceptable under the global code, then you're going to have the long list. Now, the problem there is getting every practitioner to agree to the standardization of those standards. For example, hold time. What's acceptable? Let's get into the minutiae of it. Invariably, in the code, you're going to say, if you agree to a hold time, it's okay. A hold time shouldn't be more than, pick a number, 100 milliseconds. Someone's going to say, well, David, I need 250 milliseconds in Israeli shekel, right? Maybe 5 years, actually. But different long hold times than you need in, say, euro dollar. So then you're going to have this very wide standard. And then you go back to, you want buy-side adoption, they're going to say, well, hold on a minute. I kind of can't sign up to this hold time of half a second or 100 milliseconds. When I know there's good guys over there that give me zero hold time. And then you get back into the disclosures again, Guy. I know you mentioned it in your keynote. I mean, they are expensive right now, but why can't they be, for example? Why can't they be if it's in a bilateral relationship? You sign up to the bilateral relationship, right? You agree to those terms of business. So if I was there, if I was a bank liquidity provider, I'd say these are my rules of engagement, sign up or don't. And my whole time would probably say, as I see fit. And why not? Right? So look, I think overall, I think there's some wrong turns being taken, but overall, I would say inclusivity, engagement, and with that inclusivity and engagement, you will get more adoption. But again, back to being a champion for the code, I'd say to the buy side, see it as minimum viable product. I don't see what you have to lose, if I'm honest, right? Because overall, we will iterate, Susan, to use your word, towards a better marketplace for all.
Yep. I take David's question. I mean, we are, once we're trying to land some text over the next couple of weeks, 3 or 4 weeks, and then get it out to the market for general feedback. We'll propagate that out through the, around the world through the various foreign exchange committees, and absolutely put it there to get people's feedback on. One of the, we try to be as inclusive as we can while being workable as well. But we are certainly going to give everyone the opportunity to comment shortly. We hoped we have been at this point a bit earlier, but we had a pandemic come along and get a bit in the way, and but we're hoping to get that material out for people shortly to get their comment where possible. Not where possible. We are going to get it out there shortly between now and sort of mid-November or so across a number, and there'll be more than one iteration. We will probably iterate 2 or 3 times before the middle of next year, judging on how we went last time around, particularly on some of these issues where there's a wide divergence of views. We do have a decently wide divergence of views of some of the members of the working group as well. So it isn't just people with one view. The working groups have a range of people from across the sell side and the buy side, but I do take David's point about trying to be as inclusive as possible, and we are trying to reach around the world. So issues like hold time are very much different, as you said, in euro dollar, whereas if I'm providing a quote in some of the African currencies which get hit once every 5 days or so, that's a slightly different proposition. And one of the challenges of being a global code is trying to take account of all of those different situations, and we do get quite different feedback from, say, our African representatives on the GFXC and some of our Asian representatives and some of our Latin American representatives than we do from our European representatives on some of these issues. So, I take the fact we haven't got a complete diversity of view, but we do aim to try and get a reasonable diversity. But we are going to give everyone the opportunity to comment more than once, hopefully starting in about a month's time or so. But I go back to what David said. I think that's an interesting way of putting it. It's probably a more succinct way of putting it than I have in the past in terms of minimum viable product. It's like, as I said, as David has emphasised, you may not agree with everything, but as I said earlier, you may want to take some stuff further, as LMAX does, than we do in the code, and that's fine, as long as you're shifting in that direction and not in the other direction. So I'd very much emphasise that, and I'd also emphasise that it's not desirable for people to pick and choose which principles they like and ignore which principles they don't like in the negative direction. Happy again to take them in a more stringent direction, perfectly fine. Have no issue with that at all. But it's not a question of saying, well, I like this principle, but I don't like this principle, this other principle, and I'll just ignore that in my practices. So I'd certainly endorse what David had said about the way to think about it. I think that is a useful way to consider it.
Thanks, Guy. And probably just on that inclusivity point, and I guess I speak from a standpoint of QIC being represented on the local FX committee and then the global FX committee as well. Probably just give a plug for all the resources that are available out on the websites for the GFXC and as well as the local committees. Certainly in Australia, that committee list is very long. I might just point out it might not be as gender diverse as we would like, but from a diversity, another diversity perspective. But
Susan, you're the ones hiring the FX managers, not me.
That's right. That's a broader industry issue. But, I would refer anyone who does not, is familiar with the code and the resources. There's webinars, FAQs, and it's been a great effort to pull all this together with really part-time effort. And, everyone on the committees have day jobs as well, and this is their contribution to the progress of the industry. And it might be worth discussing whether we are at a point where, we do have to fund a self-regulatory forum. I mean, it might be worth discussing, Guy and David, as we sign up to the statement. Are we at a point where we need some full-time resources for promotion, to annual check-ins on commitments of each of the firms, to help explain the proportionate approach? So I'd just throw back to you. Would that be a step in the right direction?
We did actually think about that. And the execution of that is probably, being a global body, again, this proved to be somewhat challenging in terms of the execution around that. But we did actually consider that option for a while, but some of the stumbling blocks proved too big at the time. Doesn't mean we can't revisit it. Sorry, David, you were going to say.
Look, I vote yes. I discussed it with Susan previously. So yes, we should contribute. Right, signatories to the code should contribute.
Yeah.
Look, part of that also helps me. Don't get me wrong. In that I'd like greater independence in the working groups. Okay, it's difficult because everyone's employees, and quite often they're employees of competitors, and it's the same when you look at banks, and it's not perfect. But let's face it, every single one of us is regulated by someone, and we pay a hell of a lot of regulatory fees. So let's not talk numbers right now, but it could be sizable so that we could fund some independence. We could even fund some, marketing and PR for you, Guy, around the world for the code. But certainly for some independent experts, so from independent chairs. I think you have, how many signatures do you have in total right now?
A bit over. We went through 1,000 about 2 months ago.
So, I mean, look, we could all do the WhatsApp type maths, but we could end up with something sizable that wouldn't be onerous for a group like us, or a group like Susan's, or, some of the big asset managers you've mentioned. So I vote yes for one. If it comes back up again, put our tick in the box. I can't see them being any more onerous than some of the regulatory fees we pay every year.
There's a related question which has come through from the audience, which maybe I can put to you, Susan, because probably, as I said, we've got now more, particularly, this is very bit Australian centric, but it has global relevance. There are now more buy-side participants executing FX in-house rather than relying on a fund manager to do it for them. Should more pressure be placed on the buy side? I mean, maybe if I put it particularly succinctly to you, or does ASIC have oversight of your FX operations, given you're not the largest player in the market, but nor are you the smallest?
Yeah, so obviously we are a fund manager as well as an asset owner, but we certainly act as an external manager for a large range of clients and operate commercially and under, the regulatory regime here in Australia. And I guess we've got APRA as well as ASIC, I guess, have roles in this space. And as you mentioned earlier, I mean, ASIC is now taking the code as sort of the framework through which to regulate the FX market. So I think there definitely is a role for those types of institutions to be sort of asking the question, why haven't you signed up to the code? Not necessarily, box ticking those who have signed up and sort of ensuring the adherence. I think we're still at the stage where those regulators should be asking super funds, corporates, why you have not signed up to the code, and that in turn may give us some more sort of insights into where this, what are the stumbling blocks. That'd be my perspective. David, you might have a perspective from Europe in terms and the UK in terms of the buy side take up.
I think I've said it all. I just think get on with it. But look, I do also understand their reticence, okay? Because unfortunately, in capital markets, people have long memories, and the lawyers have even longer memories. This case is still coming up from 7 or 8 years ago. I wish you were almost able to have an amnesty and say, because I don't see this Wild West that keeps coming up in the press, and invariably you read about it and it's 2013, 14, 15. I don't see that in 2020. So maybe they reserve their right just in case, to a point earlier. Maybe they don't have a strong enough FX desk. Maybe they've never focused on it, right? Maybe there's some litigation coming down the pipes from 5 years ago, right? So it is difficult. I see the reticence from their legal teams, right? Don't forgo your rights here. Someone's going to use this against you in a court. So it might be that. So there'll be brighter legal minds than me that can tell them not to worry about that, and you don't forgo any rights, right? Because it's just principle based. There's just a bit of lethargy, and I think you're getting onto the right point there when you get the behemoths. And by the way, Susan, I think you managed over $50 billion, I think, so you're big enough to me. But there are some of the behemoths, in the asset management crowd. If you get those names, then the long tail will follow. The long tail will follow. In the UK, you've got the Investment Association. I think their strap line is something like 7 trillion under management. They will vote as a group. That's the way I see it. And you've got some big names there signing up. So the long tail will come. So I think it really is a case of getting the big names first. And genuinely, I hope they join.
Mindful of time, Susan. I think we'll probably have to wrap up in a minute.
That's right. So any final comments? I guess just from me, hopefully we've just highlighted how important this code is, and there's so many resources and a network for those institutions who are yet to sign up, and hopefully we've emphasised how important that take up is, and we've promoted that in this call today. So, Guy, any final comments?
No, just very much endorse that. I mean, and a lot of those resources have been put together by Stuart Simmons, who runs FX for Susan. So thank him very much for that. And he put that resources up very much as a asset manager, and the sort of considerations that they've gone through, the QIC has gone through in signing up to the code. So I would encourage people to look at that material from QIC and others, which is on the website, and give you some sense. Here's how some of your peers have gone about it. And I'd very much endorse what David said. If we get the big names across the line, and we are getting more of those big names across the line, then that does set the example for others in the industry, and they can see see the relevance of it. And I said, in the end, and emphasise the point you started off with, Susan, what we are after here, the ultimate aim here is an appropriately functioning FX market which works for all participants. And for that to be the case, we need all participants to be following a common standard. And our aim is very much what I think what we have achieved is an FX global code which does provide that standard. And as David said, at least a minimum standard, which others can take to higher levels, and absolutely have the option to do that. So let me finish there.
Great. Any final thoughts, David, before we sign off?
I think we let Guy finish, to be honest. I think he said it all. They've done a great job. So thank you.
Good talking to you three. You both.
Thank you, Guy. Thanks, David. And thank you all listening to us.